A tax freight train is bearing down on your retirement. To protect yourself, you'll have to harness the power of zero.
Hello, everybody. Welcome to the Power of Zero show. This is David McKnight, your loyal and faithful host. I'm grateful that you're here for another episode. We still haven't missed a week. As you know, I am the best-selling author of The Power of Zero, Look Before You Lerp, and The Volatility Shield, all of which you can buy in bulk, by the way, at powerofzero.com/books. If you haven't seen our movie yet, I would suggest that you get on your horse and head on over to thetaxtrain.com. And if you're a financial advisor, you can watch it for free there. If you're not a financial advisor, you can watch it pretty much anywhere where movies can be streamed. As always, if you would like to follow me on Twitter, I would love a follow. It's at McKnight & Co., at McKnight & Co. And as always, would love a subscribe wherever you listen to podcasts. Today, we are going to talk about this thing that you hear floated every once in a while in presidential debates or on the news, and that's that all of our fiscal woes can be solved by simply taxing the rich, simply taxing the top 1%. Never at any point, and I actually will occasionally hear this from a client or a member of the general public. They'll say, well, I'm not ever going to be in one of those higher tax brackets when I retire. I'm going to be in the middle tax bracket. Maybe I'm in the 12, maybe I'm in the 22, maybe I'm in the 24. And those tax brackets will be largely spared from any tax increases over time. So I think it's high time we put this claim under a microscope. Can our fiscal challenges be solved? Can our unsustainable fiscal course as a country be corrected? And can we get put back right back on the right path by simply taxing the top 1%? Now, I'm going to throw some numbers at you. And the numbers that I'm going to throw at you these are pre-COVID-19 numbers. This comes from a piece, and I will put the link to this piece in the show notes, from the Committee for a Responsible Federal Budget. They put this out a couple of years ago. So again, this is pre-COVID-19. Pre any of the CARES Act stimulus spending, so pre the $2.2 trillion, arriving at the $26 trillion of debt. So I imagine that these numbers would even be more drastic and more draconian were they to run these numbers today. But take a listen to what they had to say. They've got a couple of different scenarios that they've run. Okay, the first one says, what would we have to do to balance the budget? And to balance the budget, that means that we would simply not pile any more money on top of the current $26 trillion of debt that we have. Now, keep in mind that $26 trillion doesn't seem like a big deal because we're at historically low interest rates. However, all of the bright minds that I've talked to say that over the course of this decade, interest rates are going to start to climb dramatically. So as those interest rates climb dramatically, the ability to sustain $26 trillion, even if we were able to balance the budget, the ability to sustain $26 trillion as interest rates rise will start to crowd out all of the other expenses in the federal budget. So let's take a look at this. What they've done is they've crunched the numbers and they said, let's say that we want to balance the budget. And we want so we don't want to increase the debt any more than what we already have. We want to keep it at $26 trillion. In order to balance the budget, we would have to raise the top marginal tax bracket for people making over $400,000, and we're not touching anybody else. Okay, everybody else can pay current tax rates. We're only going to tax people that are making more than $400,000. This is what that tax rate would have to go up to. They would have to pay tax of, ready for this? Let me clear my throat. 102%. So they would have to not only forfeit anything that they made above $400,000, but then they'd have to come up with 2% additional from, I guess, some side stash that they have to be able to pay to the federal government. So if they could just simply raise taxes to 102% on any dollar that you made above and beyond $400,000, we could balance the budget tomorrow. Okay. So essentially you'd have to go up to a guy, say LeBron James, and say, LeBron James, yeah, you made 100 million last year, but you're going to have to give us essentially 100% of everything that you made above $400,000. That's what it would look like. Okay. Now they said, okay, but what if we weren't quite so, so narrow in the scope of our confiscatory tax legislation? What if we said we are going to exempt anyone under $250,000? If we exempted anyone under $250,000, and then how high would tax rates have to go if any dollar that you made above and $250,000, was taxed at this level? So they crunched the numbers on that, and they said if they wanted to include the people that not just above 400,000, but they went all the way down to $250,000, tax rates would have to go to 90%. So not 102%, which is obviously impossible. You'd still have a impossible 90%. Okay. So any dollar you made above and beyond $250,000, you'd have to tax it at 90%. Now, what if what if they lowered that even further? They lowered it even further, and they said, let's exempt anybody under $150,000. In other words, how high would the tax rate have to be if we only exposed it to people that are making $150,000 or more? So what would happen there is it wouldn't be 102, it wouldn't be 90, it would only be 80%. In other words, if everybody who they classified as wealthy above $150,000, to balance the budget, and by the way, it's balanced the budget in 10 years. I forgot to tell you that. They would have to charge 80% tax. Okay. Now, what would that tax rate have to look like if they raised everybody's tax by, let me just read what it says. Top rate if all rates are raised by an equal amount. I don't think I totally understand what that means, but I think I do. I think what this is saying is, what is the effective tax rate everyone would have to pay to balance the budget? And it says here 49%. So everybody from the bottom tax bracket all the way up to the top income earners would have to give up 49% of. Now that may be doable. Okay, so this is what David Walker and others have said, that you start looking at a effective tax rate of 50%. If everybody contributes. So if you're thinking that you can be in the 22 or 24% tax bracket and be spared the tax apocalypse, the numbers are not bearing that out. The numbers are not demonstrating that. So that is the balanced budget. Okay. What if they didn't want to balance the budget? They just simply wanted to maintain the current deficit. So the deficit a couple years ago, so this may have been, when the deficit was 6 or 7 or 8, maybe even $800,000 when they did this. But let's take a look at it. It says if what we wanted to do is simply maintain the current deficit. And remember, what the deficit is the amount above and beyond the federal budget that they have to borrow to be able to pay all their bills. And that's what contributes to the debt. So for example, if your deficit in a given year, let's take this year, our deficit is going to be close to $4 trillion this year because of COVID-19 and other expenditures. That means that our debt will go up $4 trillion in 1 year. So the deficit is not the total debt. The deficit is how much your debt is going up each and every year because you are spending above and beyond your means. So let's go back to the example. So in other words, if we just wanted to keep the deficit where it is, where it was a couple years ago when they wrote this article, what would the top rate have to be? And remember, this is not to reduce the debt. This is not to balance the budget. This is simply to keep on piling on, let's call it $1 trillion a year. To maintain, so in other words, this is the recipe to prevent us from going up to $2 trillion per year or $3 trillion per year, or as our numbers show in 2065, $6 trillion per year. This is what would have to happen. The top tax rate would have to go up to 60% on anybody making above and beyond $400,000. In other words, you have to give up 60% of anything you made above and beyond $400,000. $250,000, if that were the threshold, that would now be 56%. So any dollar that you made above and beyond $250,000, that's 56%. Anything above and beyond people making $150,000, you'd have to give up 53%. And then if we sort of applied it evenly to everybody, then everybody would have to pay a 42% tax rate. And that's simply to prevent the, to keep growing the debt, but prevent the deficit from getting any bigger than it is today. And now remember, all these numbers are going to be bigger because these were the numbers from a couple years ago, and our fiscal condition is more dire now. We've had the COVID-19. We're going to have $4 trillion of debt. It usually takes us 4 years to pile on $4 trillion of debt. We managed to do it all in 1 year. So what's the moral of the story here? The moral of the story is simply this. If you could confiscate every single dollar that the top 1% or even the top 5% in our country made, we would not be able to get out of our current financial crisis. That's how irreversible our current financial crisis is. You can't simply tax the rich. You have to present a more realistic tax plan, you have to broaden the tax base. Every article I've ever read about this says that you simply have to broaden the tax base. You can't just confiscate 100% of everything that the rich people make. I mean, obviously that would kill the economy. Obviously the rich people would stop working. We all talk about, I talk about my presentation, Ronald Reagan, he stopped working at, basically in June because he made $100,000 per movie, and any dollar he made above and beyond $200,000, he only kept 6 cents on the dollar. And then that 6 cents went to the state of California. So it didn't pay for Ronald Reagan to work past the month of June. That is a phenomenon. That's what we call the Laffer curve. At what point will the wealthy stop working when they're giving too much of their money away, right? So you talk about the impracticality of raising taxes that high. So that's why they're saying, hey, you could, continue to pile on the debt to the tune of $1 trillion per year, and it might even be doable. You just have to tax people making more than $400,000, confiscate 60% of whatever they're making above and beyond the $400,000. But let's if we were to make it sort of more broad-based and focus it on everybody and increase the number of taxpayers that are feeding into the system and have everybody contribute to the pot under this sort of shared responsibility approach, then everybody would have to pay the 42% tax. So I think that as you're evaluating whether, as these politicians, we're in an election year, and politicians are talking about how they're really going to soak the rich, they're really going to stick it to the rich. And keep in mind, most of the times when they say that, it's to pay for something that isn't even part of the budget right now. So it might be for Medicare for all. It might be for eliminating student debt. It might be for reparations. It might be for any number of very expensive programs. And I'm not here to debate the worthiness of any of those programs. I'm simply here to debate whether we can add additional programs onto a budget that's also already fiscally unsustainable. So when they talk about soaking the rich, they're basically saying to afford this new program, and they're not even focusing on the crisis that's already at hand. So the reality is soaking the rich, the top 1%, is not enough to pay for all these new programs, let alone fix the current sustainability of the existing fiscal course So as you're thinking that there's no way politicians would ever raise taxes on you because you're in one of those middle tax brackets and you're always going to be in one of those middle tax brackets, I want you to come back and listen to this podcast, that the only way to realistically tax our way out of the problem, and I'm not talking about, I'm not talking about whether reducing spending is a worthy notion or not. I'm just simply saying that if all we did was tax our way out of the problem, these are the types of numbers that we would be looking at. We would have to broaden the tax base substantially, and we'd have to get everybody chipping in. Otherwise, you're looking at top marginal tax brackets of 60%. I think that you get to the point where you really start to smother the economy at that point. So anyway, food for thought, folks. I just want you to, as we approach this financial crisis, by the way, they're not talking now about this in terms of being a financial crisis, but it is a financial crisis. As we talk about how to, how to put our own fiscal houses in order in preparation for the tsunami of taxing and spending that's coming down the road, just remember that you are not immune to tax increases, because the smartest people in all of the most prestigious institutions and colleges all across the country have analyzed all of these numbers. And they've said that you cannot simply focus taxation on the rich to be able to pull off, balancing the budget and avoiding this, the Titanic hitting the iceberg. You have to have the ability to broaden the tax base, which means that you will likely be keeping much less of your IRA and 401k than you thought in retirement, particularly as we move beyond 2026 and closer to 2028, 2030, and beyond. All right, folks, that is the show for today. Once again, if you want to subscribe, we'd really appreciate that. I would also really appreciate if you could go onto Amazon and review some of our books. Believe it or not, that really does help. And as people see the number of reviews on Amazon skyrocket, they start to take the message in those books much, much more seriously. We will have more info for you next week on how to pre-order my new book, Tax-Free Income for Life, and we'll show you how to get Chapter 1 for free. The book doesn't come out till November, but you can get Chapter 1 for free. I'll show you how to get that by pre-ordering that. We'll talk about that next week. We will talk to you soon.